We are very happy over that, and the implication is that there is confidence in the Nigerian system, there is confidence in the Nigerian business, there is confidence in the Nigerian financial services industry. That is a major win for Nigeria. It is oversubscribed, and we are very, very glad. What that has done is that it has given us a reference mark, it has given us a benchmark, and it will enable the corporates to go and raise funds, and easily also. It is an indication of the level of confidence that the international community has in Nigeria.
It's also an indication of how international investors perceive Nigerian risk and how they prepare to price it, with yields somewhere in the region of 6.5 to 7%. What do you make of that?
Oh, that's very, very good, because when the bond opened, it opened at about 7%, and finally it closed at about 6.5%. It is very, very good. It then means that Nigerian risks are being priced appropriately, and we believe that this is going to transfer to businesses as well. It's going to lead to reduction in cost of doing business, especially the interest rate. And in general, I think it's very good for Africa.
I mean, you say that it means that there's less perception of Nigerian risk, but Nigeria has serious debt issues. Nigeria is heavily dependent on the international oil price, and when the oil price is looking good, obviously that economy will look good. But when it dips, that economy suffers shocks. What do you think authorities should be doing to try to at least stabilize the operation of the Nigerian economy?
Thank you so much. At present, the federal government has been planning to diversify the revenue base of the Nigerian economy. And one of the things that is being looked at is the agricultural sector. This is very, very huge. This is the biggest contributor to the GDP of Nigeria. The government is looking at ways of encouraging various farmers at various levels, single farmers, multi-scale, and commercial, large commercial farmers. So that is one particular aspect that is being looked at. The second one is the fact that instead of sharing the excess amount arising from the crude price, the government is looking at setting up a sovereign wealth fund, which is more like saving for the rainy day. And we believe that that is going to have significant impact in the economy.
Right. Obviously, the banks are the drivers of the Nigerian economy. They form the largest constituent of the Nigerian all-share index on the market. And they've been subject to a lot of scrutiny with banking reforms. And that coincides with international scrutiny of banks, with Basel III and other measures that have been taken, discussions even here in Davos. What do you make of the changing circumstance for banks?
I think it's very, very good. One, it is going to assist in strengthening the banks. But let me explain the Nigerian system. At this point in time, the capital adequacy ratio for banks is expected to be 10%, but I can tell you that most Nigerian banks are operating way above that. And the Basel III will also fit in very well with exactly what we are doing in Nigeria at present. I do not think that it will come to us as a surprise, because already banks have started making provisions in excess of the 10%, and also 10% in Nigeria is higher than most other economies. So we think it aligns properly with the banking reform in Nigeria. So we look at it with optimism, and we are very happy that it's coming up.
Obviously, with the banking reforms, the launching of the AMCON, mopping up non-performing loans, dealing with debt issues, has injected a level of confidence, as you're suggesting, and it's opened up the space for mergers and acquisitions in the banks. UBA is a top-tier bank in Nigeria and could be one of those banks that buys up a smaller Nigerian bank. Are you looking to go in that direction?
Well, we have looked at that, and we feel that there is actually no visible synergy that we are going to get, because today UBA has over 700 branches in Nigeria. When we buy a bank, we are also buying branches, and we think that we have sufficient number of branches today. If you recall, in 2005, UBA and the old STB merged to form the new UBA, and that produced a very, very large institution. So we believe that that corporate merger is good, and we have done it. We have acquired the scale, we have acquired the size, and all we continue to do is to consolidate on the gains of that instead of taking in another one, since there won't be any additional synergy from acquiring a new bank.
And what about UBA in Africa? Because you're one of the larger indigenous African banks that has spread its wings across the continent.
We are very happy with our presence in Africa. And I tell you, it is deliberate, because after the merger in 2005, we decided on what we call our 3-tier intent, One is to have a dominant presence in Nigeria. The second one is to be a leading financial services institution in Africa. And the third one is to have footprints in major financial centers. And going into the various African countries is a natural fit into that strategy. And that's what we are doing. Now, let me talk about Africa. The population is very, very huge. We are talking of over 1 billion people. This is a very, very big market. And the good thing about it, again, is that that population, about 50% of that is youth, people below 25. That creates extensive workforce. That creates an emerging middle class, which is growing significantly, and that is a very, very huge market. The second one is that if you look at Africa, you have commodities all over. You have the agri sector. In fact, 27% of the world arable farmland is in Africa. Now, out of this, about 4% of that is served by irrigation, which means that there is significant opportunity to scale up in that area. Again, when you look at consumer spending, in fact, the study shows that in 2008, about $860 billion was consumer spending. And this is being forecast to go as much as about 1.4 trillion in the next 10 years. When you look at the electricity accessibility, you'll find out that that is available to about 40% of the people. Banking penetration is under 25%. The internet penetration is just under 10%. So there is significant amount of opportunity.